Welcome to TalkTickers. We dive into earnings calls to pull out the insights that really matter. Today, we're unpacking Embraer's first quarter 2025 call. We'll start with the big picture and then zoom right in.
Yeah, and Embraer kicked off 2025 pretty strong. I mean, their highest Q1 revenue in 9 decades.
9 decades, wow. What was the number?
$1.1 billion.
Yeah.
And profitability looked good too. Best Q1 adjusted EBIT margin in 5 years, almost hitting that 10% mark.
Okay, 10% is a key level. And the backlog, I heard that was notable.
Definitely. All-time high, $26.4 billion. That's, a massive pipeline.
It's huge. What about getting planes out the door? Deliveries.
Up almost 30% compared to last year. So real movement there.
And they're bringing back dividends.
Correct. Regular dividends and interest on equity are back on the table. Signals a lot of confidence, I think.
And the guidance for the full year, any changes?
Nope, they're holding steady on the 2025 guidance, still expecting double-digit growth in deliveries and revenue. So the headline here is pretty positive. Things seem to be clicking.
All right, let's break it down then. How did the different parts of the business perform? Maybe start with executive aviation. Sounds like that was a bright spot.
Absolutely. Executive aviation had a really solid quarter. Record backlog for them too, $7.6 billion.
Record backlog there as well.
Yeah. And Q1 revenue jumped 35%. That's their highest since 2014.
What drove that growth? Just selling more jets?
Higher volumes, yes, but also a better product mix. So likely selling more of the higher margin aircraft. And that helped their EBIT margin too, along with good cost control. It really shows the strength in that private jet market right now.
Interesting. Okay, let's switch over to defense and security. Backlog was stable, you said?
Stable at $4.2 billion, yeah. But the big news was order confirmations.
Oh, like what?
Sweden and Slovakia firmed up their KC-390 Millennium selections. That's their big military transport.
Okay, important wins.
And Uruguay turned options for the A-29 Super Tucano into firm orders. Panama also selected the Super Tucano.
So good momentum on the order front. How did that translate to revenue?
Big jump. Revenue up 72% in defense, partly the KC-390 recognition, customer mix, project stages, a few things driving it.
And profitability?
Also better. Higher volumes helped, lower expenses compared to last year. They had some one-off negative items back then. So yeah, these contract wins are really validating their defense offerings.
Makes sense. How about commercial aviation? Revenue was flat, but you mentioned something about the margin.
Exactly. Top line was stable, but the adjusted EBIT margin saw a relevant improvement.
And EBIT is profit before interest and taxes, right? A core profitability measure.
Right. And that margin improvement came from, again, product mix and customer mix.
Yeah.
Selling the right planes to the right people, basically.
Any big orders?
Well, ANA in Japan ordered 15 E195 E2s. That's not officially in the backlog yet, probably second half of the year.
Still a nice win.
Definitely. And a little milestone, Helvetic Airways E195 E2 is now the largest jet flying into London City Airport. Shows off the E2's capabilities.
Good point. Okay, last main segment, service and support. Continued growth there.
Yeah, solid growth pace continues. They're moving ahead with the Pratt & Whitney engine shop expansion in Portugal. Backlog stable at $4.6 billion.
Revenue up.
Up 16%. Mainly because of that ramp up for the GTF engines, the geared turbofan. More of those newer engines out there means more servicing needs.
But the margin dipped a bit. Why was that?
Yeah, adjusted EBIT margin was down slightly. They put it down to product mix, the type of services sold, and the startup costs for ramping up their MRO, their maintenance, repair, and overhaul in North America.
So initial investment costs dragging it down temporarily.
Seems like it. They expect it to balance out over the year. And they did have some positive one-time items helping offset it partially.
Got it. They also talked about a production leveling plan. What's that about?
It's something they started back in 2023. The idea is to create a more stable, more linear production pace throughout the year instead of, big rushes at quarter end.
Aiming for efficiency.
Yeah, exactly. Better efficiency, productivity, and crucially, more predictable cash flow. They said they're seeing the first positive results now and expect things to be even more stable from 2026 onwards. It helps with suppliers too, apparently.
Makes sense. Now, the elephant in the room for aerospace, U.S. tariffs. How did Embraer address that?
They were pretty clear. Q1 results were not impacted, and their initial look suggests a limited impact on the full 2025 guidance, which, again, they reiterated.
Why limited?
Well, a big chunk of their aircraft content actually comes from the U.S. already. So that naturally mitigates some exposure. Plus, they're working on other initiatives to minimize the hit.
What's their estimate of the hit, though?
They're estimating maybe a 90 basis point negative impact on the 2025 EBIT margin. So not nothing, but maybe manageable. They're still arguing for zero tariffs globally in aerospace, of course.
Okay, 90 basis points. Let's dig into the actual delivery numbers and that backlog again.
Sure. So 30 aircraft delivered overall in Q1 commercial and executive combined. That's up 20% year over year.
How did that break down?
Executive aviation delivered 23 jets, 14 light, 9 midsize. That's about 15% of their full year guidance midpoint. Commercial aviation delivered 7 jets, same as last year. That's about 9% of their guidance midpoint. They did say 2 more commercial jets were ready but couldn't be delivered due to commercial issues.
Right. And that $26.4 billion backlog, how does that break down?
It's up slightly quarter over quarter, but up a huge 25% year over year.
Wow. Which segments are driving that?
Defense and security backlog is up 73%, massive jump. Executive aviation up over 65%, helped by KC-390, Super Tucano, and that big FlexJet order.
Okay.
Service and support backlog also grew nicely, up almost 50%. Commercial aviation's backlog is actually down 10%, but remember that big ANA order isn't in there yet.
So the backlog really underscores the strength in defense and executive right now. Provides a nice buffer.
Absolutely. Strong visibility for future revenue there.
Okay, beyond the top line and backlog, what about the overall financials? EBIT, cash flow?
Adjusted EBIT was $109 million, a 9.8% margin. Pretty healthy. Reported EBIT was $62 million, 5.6% margin, still a big improvement from last year.
And cash flow.
They used cash.
Yeah.
Adjusted free cash flow was negative $386 million.
Why so much cash out the door?
Mainly building up inventory. Lots of working capital needed to support the higher deliveries expected in the next 3 quarters. So investing now for later shipments.
Okay, makes sense. What about R&D?
R&D investment was $38 million, with $11 million expensed. Total program investment hit $88 million.
And the bottom line, net result?
Adjusted net result was actually a loss of $74 million, or negative 6.7% margin. That's down from a profit last year. But the reported net income was positive $73 million at 6.7% margin.
Why the difference between adjusted and reported?
The reported number includes things like deferred taxes and the results from Eve, their eVTOL subsidiary.
Got it. Let's talk debt and shareholder returns. You mentioned dividends are back.
Right. And on the debt side, they've chipped away at it. Net and gross debt, if you exclude Eve, are down $58 million over the last year. Net debt to EBITDA is down to 0.5 times. Very comfortable level.
Did they do any refinancing?
Yeah, they issued a new $650 million 10-year bond and used that cash to buy back shorter-term bonds maturing in 2027 and 2028. So they've pushed out their debt maturity profile. Average duration is now 6.3 years. Smart move.
And the dividend payout.
7 Brazilian cents per share approved for the 2024 fiscal year, payable May 23rd. For 2025 and beyond, they're looking at using interest on equity declarations, which can have tax benefits in Brazil, and potentially topping that up with dividends to meet the minimum 25% payout requirement.
Okay. And any quick update on Eve, the eVTOL venture?
Yeah, 2025 could be big for them. They expect the first flight of the full-scale prototype this year. That's a major step.
And orders?
They sounded optimistic about maybe getting their first firm orders this year, too. That would really be a catalyst, opening up a whole new market long-term.
Definitely one to watch. The call also covered specific order campaigns, right? KC-390 E2.
Correct. For the KC-390, campaigns are ongoing in India. They're hoping for progress there in the next year or two. Could be 40-80 aircraft. Huge deal. Also, Saudi Arabia, Poland.
Is the fact that NATO countries are buying it helping speed things up elsewhere?
They think so, yeah. Similar procurement processes can accelerate things. Interestingly, they haven't seen customers bundling KC-390 orders with E2 commercial jets yet.
And the E2 commercial jet campaigns.
Lots going on, but competition is tough. They expect some good news on the commercial side during the year, though.
What about the U.S. market for the KC-390? That seems like a huge potential prize.
Oh, absolutely. They see it as a great opportunity. They've showcased the plane there. They're finalizing the U.S. market strategy now with a consultant.
Would they build it in the U.S. if they got a big order?
Yes. They said with a sizable U.S. Air Force order, assembly would happen stateside. They pointed out it already has 57% U.S. content anyway.
Right. Let's shift to the supply chain, still causing headaches.
They said their structured approach is helping. But yeah, challenges remain. It's like whack-a-mole, you know. Fix one bottleneck, another pops up.
What are the current issues?
Some fuselage parts, some engine deliveries are currently tricky. But crucially, they don't see it stopping them from hitting their full-year delivery guidance. So managing it, it seems.
Okay. And you mentioned service margins dipped temporarily. They expect that to recover.
Yes, that was the message. The dip was due to that service mix and the North America MRO ramp-up costs. They see it as temporary and expect compensation throughout the year.
Got it. Any word on the Pratt & Whitney strike's impact? Or China?
They're watching the strike, trying to gauge the impact. They did say they're seeing improvements in GTF engine deliveries and quality, which is positive.
And China?
Their E190 and E195 E1 jets are certified there. They're talking to potential customers about introducing the E2, stressing it doesn't compete head-on with Chinese aircraft. They pointed to a recent delivery to a Mongolian airline flying into China as a way to showcase the E2 regionally.
What about bigger planes? Any plans beyond the E2 family?
Customers ask, apparently. But the focus for now is selling the E2s they have and investing in future tech, maybe for bigger commercial jets down the line or defense applications. Nothing concrete decided yet.
What kind of tech are they investing in?
Things like more autonomous flight, new fuselage and wing designs, advanced cockpits. They actually have a wing development project underway.
Interesting. Any updates on Latin America, Brazil, or Mexico?
No new customers in Brazil beyond Azul, who already flies the E2. In Mexico, the first E195 E2 from Mexicana should be delivered by end of July. And they're exploring C390 opportunities in Mexico, too.
They also mentioned an agreement with Turkey.
Yeah, a technological cooperation deal, jointly developing parts to expand E2 production capacity and also help introduce Embraer aircraft into the Turkish market. Covers commercial parts and market entry efforts.
And just circling back on cost control, especially with those U.S. tariffs looming.
They emphasized internal cost cuts across the board to help mitigate the tariff impact. They know you can't just switch aerospace suppliers overnight. SG&A costs were already down in Q1, so those efforts are underway.
One last thing, a cargo version of the E2.
They have developed a cargo conversion for the older E190 E1. Focus now is getting that into the market. If it does well, maybe that paves the way for an E195 cargo version later.
Okay, quite a lot covered there. So boiling it all down, what's the key message for someone tracking Embraer after this Q1 call?
I think it's a story of strong execution and resilience. You've got record Q1 revenue, decent margins, that huge all-time high backlog giving visibility. Deliveries are up, dividends are back signs of confidence.
Despite the headwinds.
Yeah, despite potential tariffs and in the ongoing supply chain stuff. They reaffirmed guidance, suggesting they feel they can manage it. Plus, you have the defense momentum and the long-term potential from Eve. So, a pretty solid narrative overall.
All right, let's shift to our This Is Not Financial Advice segment. Time for some outrageous but plausible trade ideas based on all this. What's caught your eye?
Okay, idea number one. You look at the KC-390 wins in Europe, the NATO angle, the potential in the US and India. Maybe nations really are looking to diversify military transport away from just, the big two.
So the trade is?
Go long Embraer, anticipating more international defense contracts could really boost the stock. It's not financial advice.
Okay, banking on continued defense success. Got another one.
Idea number two. Focus on executive aviation. Best Q1 revenue since 2014, record backlog there. Combine that with their efforts to mitigate U.S. tariffs, the U.S. content, the cost cuts.
Right.
Maybe consider a pairs trade. Long Embraer, short a luxury goods company that's more exposed to tariff impacts and general discretionary spending slowdowns. The idea is the strength in executive jets could be more resilient than some other high-end consumer sectors. This is not financial advice.
Interesting pair. Using Embraer's specific strength against broader luxury weakness. Okay, 2 ideas to chew on there. And that wraps up our deep dive into Embraer's first quarter 2025 earnings call. We've hit the key results, the segment performance, the strategic moves, what stands out most to you, what questions do you still have? As always, we encourage you to do your own research, dig deeper, and reach your own conclusions. Thanks for tuning in to TalkTickers. Join us next time as we tackle another earnings call.